Dear shareholders, I am pleased to report that we delivered another record profit in financial year 2011 and exceeded our headline key performance indicators by healthy margins. This robust performance comes just a year after we reframed our strategic objectives in July 2010 by adopting a new organization structure we call the New House of Maybank. Group transformation initiatives achieved growth across all our key business areas, with loans growing at the fastest pace in a decade, driven by greater contribution from Singapore and Indonesia. Together with our acquisition of Kim Eng Holdings, this is a testament to our success in expanding our regional contribution. On the back of sustained economic growth in Malaysia and the region, 2011 was another outstanding year. Profit after tax and after minority interest, or PATAMI, rose 16.6% to 4.45 billion ringgit. Group revenue rose 8.9% to 13.42 billion ringgit, with all key business segments posting higher revenue spurred by strong loans and non-interest income growth. Gross loans grew 21.7%, supported by strong overseas loans growth of 29.4%, with both Singapore and Bank International Indonesia recording 25.8% growth. Meanwhile, domestic loans growth of 16.8% was well above the industry average of 13.5%. Net interest income rose 6.1% to 7.19 billion ringgit due to the strong loans growth by Malaysia and BRI, but this was offset by lower margins as a result of intense competition. Our three home markets of Malaysia, Singapore and Indonesia all posted strong results. In Malaysia, profit before tax improved from 4.12 billion ringgit to 4.75 billion ringgit. In Singapore, from 338 million Sing dollars to 375 million Sing dollars. And in Indonesia, from 607 billion rupiah to 782 billion rupiah. Islamic banking income rose 8.9% on the back of strong financing growth of 35.1%. Islamic banking now accounts for 27.4% of group loans compared to 24% a year ago. Net income from insurance business recorded 31.2% growth, owing to a higher transfer of actuarial surplus to insurance business income from both insurance and takaful. Non-interest income was up 11.4% to 4.12 billion ringgit, thanks to higher fee income, including brokerage fees, and the profit from sales of equity and debt securities in a buoyant market. With this financial performance, we surpassed our two headline KPIs with a return on equity of 15.2%, exceeding the target of 14%, and a 22.6% growth in loans and debt securities, far ahead of our 12% target. Last year, I mentioned that in July 2010, we reorganized our operations into three business pillars called the New House of Maybank. In line with this, we embedded our business initiatives into three sectors to enable a more coordinated and effective business execution. I'm glad to say that this sector-driven agenda has been embraced by the whole organization, and the initiatives are achieving fantastic results. The new organization structure has accelerated the performance of both Community Financial Services and Global Wholesale Banking. Community Financial Services is now strengthening our competitive position to make us the undisputed leader in retail financial services. Global Wholesale Banking has two goals: to maintain its leadership of Malaysia's corporate banking sector and to become a regional wholesale banking powerhouse by 2015. Meanwhile, Etika, our insurance and takaful arm, is achieving sustainable and profitable growth and beefing up its leadership in the industry. On our regional expansion, we are well on track to deliver 40% profit contribution to the group by 2015. A major milestone was the acquisition of Kim Eng, which became a subsidiary in May 2011. Kim Eng, a leading brokerage firm with operations across the region, is a platform for us to build our regional investment banking presence to become a leading wholesale bank in ASEAN. In Singapore, we are growing our SME segment and expanding our structured trade business. Besides this, we are boosting our income from wealth management and have just kick-started a regional wealth management program. In Indonesia, our goal is for BII to become an innovative relationship bank for businesses and communities. Last year, we opened 70 new branches, and we will be expanding this network to 450 by the end of 2012. We continue to collaborate with BII on business initiatives and support functions to increase its contribution to group earnings. As part of our strategy to be ASEAN's leading Islamic bank by 2015, we introduced our Islamic First strategy last year, and I'm glad to report that we have been successful in growing our Islamic assets to account for 27% of domestic loans, well on the way to account for a third of the group's domestic financing portfolio by 2015. Islamic banking is now being developed with a global approach. We are pursuing growth in Indonesia, the country with the world's biggest Muslim population, through our conversion of PT Bank Maybank Indocorp into an Islamic bank, renamed as PT Maybank Syariah Indonesia. We are also leveraging on our relationship with our associate company, MCB, in Pakistan to develop Islamic banking business. As you may well know, our mission is humanizing financial services across Asia. This means that customer welfare comes first. Our commitment to this is based on three key principles: providing people with access to funding, offering fair terms and pricing, and advising customers based on their needs. Humanizing our services also means being at the heart of the community. It means being a responsible corporate citizen committed to building a sustainable future for the ASEAN region through long-term social and economic development. It also means enriching the lives of the communities we serve and advocating a greener earth. With the newly set up Maybank Foundation, we will be able to execute our corporate responsibility role by engaging with communities across Asia to develop sustainable solutions. In so doing, our intention is that the foundation will offer hope, meet needs, inspire lives, and support aspiration. Humanizing our services begins at home. In 2011, we continued to focus on communicating our vision, our mission, and strategies to our staff so as to achieve a real cultural transformation fueled by our shared Tiger values of teamwork, integrity, growth, excellence and efficiency, and relationship building. In 2011, we embarked on a project to refresh the Maybank brand. This will enable us to leverage more effectively on Maybank's brand equity through a more consistent interpretation and communication of our brand proposition to all stakeholders across Asia. We are pleased to introduce the new Maybank logo as part of enhancing our brand that will become an ever more valuable asset and a key tool in building enduring customer relationships. Efficient capital management is a priority in anticipation of the more stringent capital requirements of Basel III. As part of our ongoing capital optimization initiatives, we raised 6 billion ringgit in capital through capital raising exercises and through our dividend reinvestment plans for the last 2 dividend payments. We maintained healthy capital levels after the acquisition of Kim Eng, with our core capital ratio and risk-weighted capital ratio at 11.8% and 15.4% respectively as at 30th June 2011. Economic prospects for Malaysia and the ASEAN region remain positive, supported by resilient domestic demand despite uncertainties and challenges in the US, the Eurozone, and Japan. As a result, we anticipate loans growth in our 3 home markets to remain strong. Robust expansion in the corporate segment should offset the more moderate pace of consumer demand due to rising inflation and regulatory measures to rein in household debt levels. Competition for loans and deposits will remain intense, resulting in interest margins still being under pressure. We will continue to expand non-interest income through growth in our insurance and investment banking business, which will leverage on the regional investment banking platform of Kim Eng and the expertise of Maybank IB to boost the group's fee-based income. Overall, we are confident of recording a still better financial performance for the current financial period, which will be 6 months ending 31st December 2011 as we change to a December financial year end. Our headline KPIs for the period are a return on equity of 16% and loans and debt securities growth of 12%. Everything we are today, everything we stand for, and everything we achieved last year is a tribute to the commitment of all our stakeholders. We are profoundly grateful for the dedication of all our 42,000 group staff and the loyalty of our customers, the trust of our partners and associates, and the support of regulatory authorities that have guided us over the years. Meanwhile, buoyed by the outstanding results achieved in financial year 2011 and strengthened by the backing of our stakeholders, our transformation will continue as we journey to become a regional financial services leader by humanizing financial services across Asia. Thank you.